Well, good morning, everyone. Welcome to our Thursday morning trading room. Just a moment, we'll get the screen share going on. There we go. So, yesterday's session continued to be very sideways, kind of trading within the larger trading range that established itself on Tuesday. And that's kind of where we find ourselves again. The market opening near the 68.10 price range, which is also near the bottom end of that sideways trading range. So we're just gonna wait a little bit here, see which way the market may be leaning. Looks like right now the hawk very neutral, lots of yellow bars here. The falcon also starting to break up a little bit, might indicate a little bit of a trend change. The eagle, well, the eagle is just in full-on bear mode right now. For those of you who like your first in sync eagle signal, well, there it is right there. That's your first in sync eagle signal of the day. And likewise here for the raptor, here is our first in sync signal. So we've got a trend that's down, and this is your first signal to short. It's a hard edge bounce and number 3 signal. And that tends to be fairly reliable. However, it is still quite early. I'm going to try not to make the same mistake I made the last couple of days. And get in too early. Okay, well, we're still drifting sideways, as you can see. The eagle here probably giving us the best indication of what's going on. These are valid signals, by the way. This is a high probability signal. We're getting a green bar sell. It's just a little bit early for me. Like I said, I kind of got stuck on some early trades the last few days. Dug myself a hole early and then had to spend the rest of the session trying to dig my way out. But this is what it would look like. Of course, the green bar sell signal itself developed up here. Anthony thinks the NASDAQ has bottomed out. It's time to go uptrend. So he's looking 68.36. Yeah, I can see that. That would kind of be a retracement of the overnight. Yeah, Anthony makes a good comment here. A 5-minute chart doesn't allow you to see the true trend. It's that's why we have the different tools, of course, the Eagle Trend Trader, programmed specifically to try to pick up market trends. I always have a daily chart nearby as well. I don't mind glancing at a daily chart just to give me another point of view. All right, well, we're plodding along here a little bit. You get the idea. I won't bore you with that. We'll leave that on the side for now. It's not unusual if there is something resembling an overnight trend, as we have here. It's not unusual to see the market try to reverse on that and fill it, because we've actually got, you can see the Asian session extremely quiet. We've actually got a little bit of a gap here. So the market closing yesterday around the 68.50 zone, opening this morning around 68.10. We have got an upside gap. Now, it isn't always necessary for a market to fill the gap the same day that the gap occurs. Sometimes, if the market's really moving, it won't fill that gap for days. Okay, we're still thrashing about here a little bit. I suppose what you could do, if you were really inclined to take a trade here, actually let's do it on the Eagle, it's a little more defined. You could use your handy dandy OCO order and you could bracket this trade. You could look to buy above the high and you'd probably just use that high right there. You could short below the low and just allow the market itself to show you which way it wants to go from here. It's a good idea to have a stop strategy in play. And now you can just wait it out. I might actually give it another tick or two here on the short side. But the long side should be okay. All right. And there we go. You've got your early morning sideways range established. And now you can let the market decide for you. Here now, another green bar sell off of the hard edge. And yeah, we really don't have too many other follow-up signals here at the moment, so we may as well stay with the bracket trade that we have going on here on the Eagle. Yes, David is asking here, does the accept button refer to the trade manager? Yes, because when you're using the OCO, and here I'll have to demonstrate on another instrument, the OCO is independent of your risk manager portion. This little bit down here is what we call the risk manager. And that's because this is where you can set your risk, or you can click on it. You can go into manual mode. You can preset your quantity there. You can preset your profit targets, how you want your trade handled, and so on and so forth. So this part is called the risk manager. And when we hit our set prices button, we can set up our trade. Risk manager will calculate how much we can afford. If we like the trade, then we can submit it. All right. The accept button has to do with our stop strategies. This is the part that we refer to as the profit manager. So what happens is, by default, the ATR strategy is selected. You can make adjustments to it if you want to make it more conservative, or if you'd like to make it more aggressive. You see, every time I click accept, it makes those changes. If I want to say I want to compare the ATR strategy, and I'm thinking, maybe I should be using the chandelier strategy, so I can click on chandelier. I can preview it, and then these orange hash marks show me what the chandelier strategy would be doing. If I like that, well, then I can click on that, I click accept, and now all of a sudden I have the chandelier strategy in play. All right, I heard I got filled here. I just want to make sure my stops aren't too tight. We'll go with that for right now. So that's what the accept button does for you. And you know what? I am going to hold my stops up here for a sec. So I've got my stops at the top end of the trading range, got filled on the breakout below. It's not unusual to see a market give a little bit of a bounce back after breaking a significant support or resistance area. So you don't want to have your stops too terribly tight if you can afford it. Yeah, okay, so that's what the accept button does. And then, like I said, you can preview different stop strategies. If you want to see what your parabolic mode might be like, you can click parabolics. And then again, the orange hash marks will show you what the parabolics would be doing. And if you like that, you can click accept, and now you'll be in parabolic mode. The easiest way to learn about the trade manager is just to play with it. Make sure you're in sim mode, place an order, use your buy and sell buttons, use your set prices buttons, and just see what happens. Change your stop strategies while you're in the middle of a trade, and just play with it. Really, it's a very intuitive tool. People have asked, well, why don't you do a detailed manual on the trade manager? Well, first off, we have tons of videos about the trade manager. And secondly, like I said, it's a very intuitive tool. So, and that's true for all the DTS tools and the Raptor tools. Go ahead, play with it. You won't break it, I promise. If I can't break it, you certainly won't. Okay, I'm gonna move here now. I'm gonna move into my ATR mode, and I may hold my stops right there for a moment. Yeah, maybe let's go to swing mode. I'm going to bring my break even up a little. This is where the market flinched before. In fact, you know what? I'm going to put my break even right on the low of this current bar. Whenever Adam would produce a new piece of software, I always was the one who got to play with it first, obviously. Well, a lot of times I was involved in the design as well, but I was primarily there to see if I could break it. and I can. Like I said, if nobody else can break a piece of software, I certainly can. Those of you who have spent much time in the room with me know that I am not exactly tech savvy. Not getting much follow through here, which is unfortunate. Yeah, David's asking, does the green dot mean there's a potential setup? The green dots are always warning dots. It means that some of the trade parameters have been met, and this is true for all your tools. Red dot means you've got potentially a bearish signal. Green dots mean there are some bullish parameters of the programming being met. Now, the signal is not complete until we get the triangle and hash mark. So you shouldn't let green dots scare you off. They're going to happen. Whenever there's a little bit of a pullback, you can see that you may get a green warning dot, and that just makes sense, right? Because it's counter to the trend. Of course, there's some bullish tendencies there, but you can see the signal never really completed. This was the first signal where the market actually got high enough to complete a triangle and a hash mark. However, here on the Eagle, it was against our trading band. Our trading band was bearish, and when that's the case, we're looking for sell signals, not for buy signals. So even though at this particular point the market did produce a full signal to buy, it's still not a signal that we would have bought. Well, it was worth a try, but the market's still heading a little bit sideways. Oops. Well, you know, we could try it again. There's not much going on here, so let's throw in another OCO order. Now, remember, when you do your OCOs, these orders are live the moment you put them on your chart. All right. Let's get a stop enabled here. All right, trying it to the upside now. Just a very slow day today. Absolutely. While we're waiting on this, Paul's asking, would you review the hawk signals, please? Absolutely, Paul. All right, the easiest way to do this is if I pull up the hawk cheat sheet. Now, this is available in the members area of the website. And if you don't remember how to access it, drop me an email and I will send this off to you. These are the 5 high probability signals that we tend to focus on with the hawk. You'll notice that there are other signals here as well, and most of these other signals work out. However, these are the 5 setups that tend to offer the greatest probability of success. The first one is the first micro-macro crossover signal. This is a very high probability signal. This is one of those signals that you can almost take without exception. I say almost because the last couple of days the market's been very sideways, and you may have been burned on a few first micro-macro cross signals, but this signal is so strong that if I got burned on, say I tried to buy a first micro-macro cross higher, the market didn't go higher, reverse gave me a first micro-macro cross lower, and I tried to sell that and then got burned on that one, I would seriously consider packing it in for the day. That is how strong that signal is. In fact, I've often said, and I don't know if Mark's in the room here this morning, but Mark would be one to give me his testimonial that you could make a living trading the first micro-macro cross signals. I know that's one of the signals that he really focuses on. So the first micro-macro cross is really just the first signal that is in sync after the micro line and macro lines cross over. So the micro line is the thin one, macro line is the thick one. It's the first signal in this case where everything is green. So you've got green bars, green trend lines, green filter, green signal. That is your first micro-macro cross. Your macro line pullback is again, a high probability signal. It's easy to identify because everything stays in sync except the micro line. The micro line changes color. That is a key component to the macro pullback. Then we get our 4 arrow consolidations going on. And excuse me here just for a moment. I gotta see what the trade's doing. Oh, hey, we're doing pretty good here. Let me change my stop strategy just for a moment. And we'll try to protect some of that open profit. In fact, you know what? There we go. I'll really squeeze this trade. Okay, so the 4 arrow consolidation. This typically has a bull flag or bear flag shape to it, depending whether the market's going up or down. Unfortunately, in my example here, the market was going sideways, but a sideways formation is acceptable too. We actually have a 4 arrow consolidation up here as well, but I don't like it as well because you see it's got an up slope to it. I don't mind if it goes sideways. In an uptrend, I much prefer it to have like a bear flag, or pardon me, a bull flag shape to it, which would be this type of pullback. But it's when you get signals clustering, right? You get 4 signals developing and the market's not really going anywhere. Well, the market will tend to move off of that 4th signal. This signal is so strong that it is the only hawk signal that I will consider with a yellow bar. Normally, a yellow bar negates the signal for me. But the 4 arrow consolidation is so strong that I will take it even if one of these bars, and it will usually be one of the last ones, is a yellow bar. Then you get the post 4 arrow consolidation, kind of that little flurry that occurs after the 4 arrow consolidation. So you get the breakout move, then you'll typically get another signal, and that one is also a high probability signal. In this example, you can see that the 4 arrow post consolidation pattern was also a macro pullback. And this will happen too. Occasionally, the signals will develop in such a way that some of the signals will piggyback on each other. The last signal is, in the case of an uptrend, is a red bar buy. It tends to be a relatively weak signal, and it often tells you that a trend is in jeopardy. Now, depending on the market you're trading, the red bar buy can sometimes be a fairly strong signal. If you're trading a market like the mid cap, that's the EMD, you'll very often get deep retracements resulting in red bar buy signals, but they are still very valid signals with some very strong follow through. So like I said, you kind of got to take it in the context of the market you're trading, and just in the market context overall. Very often with the red bar buy signal, because the market is setting up for, or seems to be setting up for, a potential reversal, you can take it with trend, but very often I will set up to short it on a break below the formation. So rather than take it on the hash mark, I'm going to look to take it the opposite direction below the low of the lowest bar. The red bar buy can also be used just as an early warning, because very often what happens is after the red bar buy forms and fails, you're going to get a first micro macro cross in the opposite direction in almost the same price area as the failure occurred. All right, so those are your basic hawk signals, your high probability hawk signals. And it looks like I got tagged out here on this quick little reverse. Now the eagle trying to produce a signal to the long side, as is the raptor right here. So we've got a number one cloud crossover signal. The cloud's fully crossing. We've got that pullback, and then the market comes out trying to resume the new direction, and that's what produces the number one signal. So we've got a chance to get in on this one. I'd probably give it a couple of ticks, just because it's going to make it a little bit easier to cover the trade somewhere near the hard edge versus trying to cover it here at the low, which is really the spot that you should be covering the trade. And the reason for that is the market may end up making a test of the extreme here. We may get a rather deep retracement, and obviously you don't want to get tagged out when that happens. Okay, so it looks like they're not quite ready yet. We'll put that back on the shelf for now. David asks, I've been having trouble switching the risk control from percent to manual. In manual, the number section gets grayed out and I'm unable to enter a number. All right, let's take a look here. So if you hover your mouse over the risk percent icon and you left click, you will move to manual mode. And then that should allow you to change this quantity here to however many contracts you want. By default, it is set at 1. If you're unable to do that, try doing this first. Try reloading your Ninja script. And that's essentially going to reboot your trade manager. If it's in risk percent mode, though, you can't make any changes to the quantity. You see that? Oh, I see. Yeah, Rick says I was trying to change this value. This value right here, yeah, and you know what, Rick? Intuitively, that makes more sense, doesn't it? The risk percent value is this value right here. And then when you go to manual mode, you end up going into the quantity value right there. Yeah, I never thought of that. That's I can see how that could be a little misleading. Okay, well, here we are, back and forth. We do have here, speaking of first micro macro crossover signals, we have a first micro macro crossover signal right here. It's right here. So the micro macro lines crossed way back here, but this bar, this signal was not all in sync, was it? No, it was not. It actually formed with a yellow bar, so that negated the signal. Oh, I think they slipped me a tick or two. Look at that. Wow, what's with all the slippage here lately? Okay, let's see if we can't sneak the market back near the low of the morning. So this signal right here, that is actually your first micro macro crossover signal, because that is the first signal that is in sync after your micro line and macro lines have crossed. Now, it doesn't normally take this long for a first micro macro cross to develop. You can see that usually it develops relatively quickly after the micro and macro lines cross. This signal right here, the macro line was still gray. So this signal right here is the first micro macro cross higher, and this signal right here is the first micro macro cross lower. They're struggling this morning, no doubt about it. Yeah, you could be right. David writes, one problem with the sell signal is that price is just above the big period of consolidation this morning. Yeah, I honestly, folks, I try not to read too much into it. The market will do what the market will do, and it usually does the exact opposite of what I think it will do. In fact, let me share with you a invaluable trading tool that I developed a little while ago. Here you go. Here, this is a trading aid. This is something that will help you immensely with your trading. Trading is, you know, it's fun. to try to figure out what the market will do, but honestly, trading is very reactionary. You're always reacting to what the market is doing. That's the chief difference between a trader and a weatherman, is a trader doesn't predict things. A trader reacts to what is happening. It's the weatherman's job to try to predict things, not a trader's job. Okay, I think it's probably time to adjust my stop here a little bit. Come on, give me one more swing. No, they're not going to. Gonna be a little bit late on this one, I think. Are they gonna give me a chance to get out? No, they are not. Look at that, you stinkers. Okay, well, now that we have a pretty good indication that they don't want to go lower, we can look for an opportunity to buy the market higher. And now the first micro-macro cross higher is right here. Stops, unfortunately, need to be a little bit further away to start, at least. Oh, the Raptor gave us a decent number 2 signal, which is the reverse signal. David asks, is there a cheat sheet on the Raptor? No, because the Raptor has the signal prompts. The signal prompts would just, the cheat sheet would show you the signal prompts is what it would do. Because the other tools don't have the signal prompts, we have a cheat sheet for those. Okay, trades up at break even now, and I'm gonna probably squeeze this trade a little harder. There we go. We'll go into get the parabolic mode ready. And okay, let's get the parabolics working for us. That's one thing, you know, when you take a losing trade, you should never try to get too upset with yourself if you take a bad trade. After all, what we're doing here is, it's not easy. We're trying to predict what the market will do, or take advantage. I just told you not to predict the market, but you get my meaning. So we need to you're gonna end up trying things, and sometimes the market will toss you a curveball, and you're gonna swing and miss, incur a loss. But at least if you know which way the market is not inclined to go, well, then you can reverse on your position and take a look at opportunities in the opposite direction. So long as you finish the day in the black, it's a good day. You don't want to have too many days where you finish in the red. The parabolic's catching up now a little bit, so the programming is suggesting that maybe the market's getting a little bit soft as we must be near one of our resistance lines. Let's take a look here. Oh, we just broke through 68.15. And where's the next stop? 68.31. We'll see. It may, oh, I was going to say it may even try to get into that opening range gap. But that was a decent enough little trade. Again, that first micro-macro crossover signal, very strong signal. Part of the first micro-macro cross signal is also here in the Raptor programming. And you can see here on the Raptor, we did end up producing a #1 signal, a cloud crossover signal, a very good #2 signal. All right, we'll set that aside for now. right, the hawk now moving back into yellow bars, and the falcon starting to turn over. So we're getting a little pushback from the sellers now. I think the market has gotten perhaps a little bit more bullish, maybe just moderately more bullish. Essentially, we're at the bottom end of yesterday's trading range. That's where that rally took off from. Yeah, David says I see support at 68.10 and 3/4. And, you know, again, you don't want to define these things too fine. But, yeah, so there's some support right there. Then we had some more down here in the overnight. Or, pardon me, the first hour. Well, you can end up, here's the problem with some support resistance. You can end up drawing so many lines that nothing makes sense anymore. All right, so we're in a little bit of a pullback phase. Here now, a hard edge buy forming. You know what? Because the earlier trend was down and now we're getting a little bit of a pushback again, I don't mind the idea of the buy, but let's see if I can get a better second push opportunity. So the second push, all I'm doing is I'm letting the signal engage. I'm looking to see where the market is flinching. And then I'll take my signal above there. In fact, you'd probably be better off giving it a couple of ticks still. This may prove to be a little bit too tight. A move back here to 68.05, very reasonable. Just eyeballing it, it looks like it's about halfway within this last trading range. I'm not a big one on Fibonacci retracements, but the fact of the matter is the markets do have a tendency to pull back from time to time, and very often when they do that, they will pull back to around the 50% level. Okay, this is actually now a number 2 signal. It was a little bit drawn out, that's why it didn't print as a number 2, but we have a trend. We have a test of the extreme in this case being the high, and then we have a sell signal. So that is actually a number 2 signal that printed right there. It did come after a number 3 signal, so that tends to be a little bit more reliable a lot of times. All right, looks like we can cancel that. Not quite ready. And here we are again with that first micro macro cross signal. So the hawk getting a little bit more aggressive here on the short side. Oh, I should have just punched in with the signal there. Let's see if they give me a follow-up. It's a little bit further than I would like, but oh, darn it, there they go again. Nuts. Well, I guess I'm on hold now for a macro pullback or something. And here we are, 68.05. Excuse me, just a little bit slow on that one. Yeah, David says, why not put an OCO order here? You could, certainly you could. You could bracket it anytime you think the market is stuck. You know, like we were looking at here earlier. We have this tiny little range down here. That's bracketable. When we have the range out of the open, that's bracketable. Larger swings sometimes a little bit more difficult, but yeah, you could do an OCO there as well. Or if you wanted to condense it some more, you could do it like that. No, those are all valid. But right now, I'm kind of on hold as things get bearish again. So here the Falcon now with a trend change signal, or the makings of a trend change signal. We don't have the completed signal just yet. There it is. So we can look to do a trend change signal. Oh my gosh, they slipped me 4 ticks on the entry there. That's just crazy. Market seemingly a little thin. And why not? Here we'll swing for the fences. We'll go back down here to the support zone. Stops hitting my break-even trigger. Oh, don't flinch now. Come on, you can do it. 67.92 3/4 seems very plausible. 67.69 3/4, that may be a bit of a stretch for today. Where is the low of, doggone it. Yeah, so low of opening range, 67.87. They'll probably end up working their way down there. But not yet. Just a little bit neutral. All right, well, now we're going to try first micro macro cross higher. Possible trend change on the Falcon higher. Oh, I don't know. I don't know if I want to get too bullish just yet. All right, well, it is a signal. Unfortunately, here the Raptor this morning, we're getting some signals. We're also getting, because the Raptor, again, is a hybrid, when the market is conflicted this way, or we're getting the broader swings, a lot of times we're going to get the Raptor clouds twisting up. And so what you may need to do with the Raptor is you may need to anticipate some of the signals. So for instance, here, it looks as though the clouds are crossing over. We've already got the pullback. It's not going to print as a #1 signal, but you could still anticipate it as a #1 signal and then buy it when the signal develops. And that's a what we refer to as an early #1 signal. Keep that stop a little bit further away. Paul says it seems like it would be difficult to only make 2 or 3 trades a day on the Hawk. Yeah, it can be. Discipline in trading is very important. Obviously, because I'm moderating the training/trading room, we're in here perhaps a little bit longer than I would be in reality. A lot of times in trading, and others in the trading room will have experienced this as well, but a lot of times your trading is done in the first half hour, 45 minutes of the day. You've met your quota. You've banked your profit. Why risk losing it? Why risk doing something else? Because the truth of trading is, because we're obviously always dealing with the unknown, is the more you trade, the more likely you are to incur a losing trade. The key to successful trading is to find your high probability signal, and we'll pick on the first micro macro cross signal here this morning, and to maximize your earnings on the signal. By that I mean going with your correct position size. So let's take first micro macro cross signal. Well, let's start with that one down here. So the market opened, we're about 15 minutes in, and you figure, okay, that's enough time for the market to settle in. I've got a first micro macro cross signal. I'm going to risk it like so. Trade manager says I can afford 2 contracts. The trade goes ahead. Boom, I hit my profit target. Okay, good. Trade number 1 in the books. So now you sit and you wait. Actually, this was another first micro macro cross signal. And let's say you set it up like this. Now trade manager says, oh, I can afford 3. So boom, here you are 20 minutes into the session and you're already up $250 on 2 trades. Not a bad day's work. So let's say you set a 3 trade quota for the day. And you're waiting, and oh, there's your first micro macro cross higher. And you choose to set it up like this. And a few minutes later, you hit your profit target. And now what were we at? 250. So now you're 350 on the day. You've got your 3 trades in. Your day is done, and you've only been trading for about 25 minutes. The point of what I'm showing you here is that those earnings would not be possible if it were not for maximizing your position on the trade relative to your risk. If you were only trading onesies, instead of being up $350, you would be up $150, which is still very respectable. And if you're trading a small account, it's just going to be a fact of life. You're going to take the 150 and you're going to keep adding to that. And hopefully, you know, at the end of the year, you'll be up $15,000 or $20,000, which is a very realistic sum for trading 2 or 3 times a day. And then you're in a position to hopefully take an additional contract or 2. And that boosts your earnings. You're not necessarily going to earn more by trading more often, because somewhere along here, where's the next first micro macro cross? I think this one worked out as well. But somewhere along here, you're going to end up taking a stinker, and it's going to end up costing you your risk amount. So you can see, based on my risk percent, I'm routinely risking about $300 on a trade. So if I just earn $350 or $400 and I take a stinker, well, now all of a sudden I'm back to square one, right? And it's not like the market is a machine where it just keeps generating signal or profitable signal after profitable signal after profitable signal. The market is very much like a human being. The market gets tired. The market gets cranky. The market gets spiteful. And these kinds of things can muddy the waters a little bit, and it can lead to some signals that may not be as valid. So it's definitely, it's my opinion that it's definitely to your advantage to limit the number of times you are in a trade, and and capitalize on those opportunities the best that you can. Now it seems I've let my Raptor trade go here, so gonna have to forgive me. Didn't get a chance to manage my stops on this one very well. We'll see if we can catch a little bit of a reprieve here, but I don't think so. It looks like the market's going to try to head back lower again. Steve says in reality, I'd be trading 24/7 if I could, but I must still sleep and go to my slave job 50 hours a week. I know a guy who quite literally trades almost every waking moment, and honestly, I don't know how he does it. I don't know why he does it. He will be the first to tell you you don't have to trade often to make money trading. In fact, and here again, this is not to boast or anything like that, but just to show you here on the trader view. I love this graph right here. Look at how many days we had where there was not one losing trade. The last couple of weeks or so, when the market's been moving sideways, has been a little bit more difficult. But look at all these days here where we just took winning trade after winning trade after winning trade, and it's not because we took a lot of trades. You know, you look at this graph here, shows you the volume. A lot of these days, the volume was like 4 trades. This one was 6 trades. And that was probably because I had to recover from a loss. So those kinds of things, you know, you want to keep your trading frequency down. You want to, oh no, that was probably a multiple. You want to maximize your position. That's what these bigger spikes are. These would be multiple, trading multiple positions. But you want to keep your consistency up. That makes the biggest difference. I guarantee you, if you are able to never have a losing trade, you will make a lot of money. And in case you think that's impossible, you should do a Google search on a man by the name of Judah Toussaint. I think it's spelled Toussant. Judah Toussaint. He was a cotton trader in the 1800s. Never had a losing trade. Not one. It is doable. I guarantee you he was very particular about what trades he took. I guarantee you that he did not trade out of boredom because he felt like he had to do something. He would only trade when the conditions were best for him. And that's, like I said, very important. All right, so it looks like the downtrend in full force as the sellers try to push the market back toward the low of the morning. I guess the big test will be to see whether or not they can push it below the morning low, but there's still a little bit of room to profit there. I missed some of these earlier signals here just as they were developing. Got another first micro macro cross lower, got a macro pullback here on the hawk, got a hard edge bounce and a trend change signal here on the eagle, and likewise here on the raptor. We got that number one signal with the larger overall downtrend. Ooh, look at them go now. All right, well, just kind of in a holding pattern until we get another chance to get on board here. We've got the beginnings of a 4-arrow consolidation here in the hawk. Getting a little bit of a reaction here to the secondary support zone. Down here at 67.92, that was my original target, but couldn't ride out that swing, unfortunately. This, by the way, is where the buyers stepped in before, remember? That's where they rallied the market up. And here we're actually getting a counter trend signal on the Falcon. There's going to be a double dot signal. It's not a signal that I point out very often because it is counter trend, but if you can tie it in with a nearby support or resistance zone, it can be quite reliable. So there's the double dot signal, and it's kind of running away on me a little. It's essentially an early attempt to take the market higher. Because it's counter trend, you would probably want to take profit on target, and you probably would not want to go in for your full risk amount. Rather, you'd probably change to just a single to make sure you don't blow yourself up. Wow, the market just really in another grinding sideways kind of day today. All right. Here, a 4-arrow consolidation with trend. We're going to finish off the session here with one of these. The slippage has been amazing as well. I can't get over how much I'm getting slipped. These kinds of things, they don't usually happen in a market like the NASDAQ, especially in April. I don't know if there's just a lack of market participation, if there's not enough players. This 4-arrow consolidation, you can see, has that characteristic bear flag to it. And I've got 2 contracts in, so I think I'll just take profit on target if I can get it. Oh, hooray for me. Look at that. All right, I think that's where we're going to call it a day. And if you're going to continue trading today, if you're going to try to hang out, well, the lows of the morning, that's the next big obstacle. Once you're below there, then I think we can say we're outside of the trading range and that the market may actually follow through. But bottom end of the trading range, it's a difficult place to be. And the market may have other ideas. All right, gang, I will see you again tomorrow. We'll talk to you then. Bye for now.